Welcome to the award-winning Real Estate Mortgage Shop, where home buyers, homeowners, and investors get practical mortgage and real estate insight straight from the pros with your host, Jo Garner.
Welcome to our internet listeners and podcast listeners on Real Estate Mortgage Shop across the 50 states. I'm your host, Jo Garner. I'm a mortgage loan originator. You connect with me today at jogarner.com. Our topic on March 10th, 2026 is reading the rate signals, timing smart moves for buyers and homeowners. Thank you to real estate attorneys Shelley Rothman and Rob Drawn of Griffin Clift, Everton, and Mashmeyer Law Firm for sponsoring this episode of Real Estate Mortgage Shop. For your title work and your closing on your home purchase or refinance, contact Rob and Shelley at 901-752-1133. Well, this is the first time in this studio. Mark's been on other shows with us, but Mark Ruleman, he's a financial advisor and owner of Ruleman Asset Management and Planning. He's in the house, and Mark, you are known in our circles as the great communicator, and when it comes to the economy, I think of you as the man who sees around corners.
Well, thank you very much, Jo. It's a pleasure being here again, and great opportunity. I appreciate you thinking of me. I have 38 years experience, and I didn't look around a lot of corners when I first started, but I figured out by learning from history that you won't repeat the mistakes that have been made before. We're going to talk about a lot of history today, the impact of the 10-year Treasury bond on mortgage rates, and the importance of understanding where we are with inflation and where we are with mortgage rates and where we think they're headed, despite the volatility of the world and the things that have been going on. It will be a great opportunity to share. Also, over the past 38 years now, I've refined my practice down to about 35 households. I go very deep in my relationships as opposed to many advisors who go very wide with a lot of different advisors. I'd rather have few clients as opposed to be everything to them.
What are the services that you offer, Mark?
The main service that I do is asset management and financial planning. Back in 2000, I realized if I wasn't doing financial planning to help my clients meet their retirement goals, I was doing a disservice.
Right.
And so I added financial planning then. So I've been doing that for 26 years now, and believe it's a critical part of everybody who's getting ready to retire, and particularly staying that way.
Right. I love it. Well, Mark, we're going to hear a lot from you today, but talking about the market and all this volatility, don't put off to tomorrow what you can do today. Timing right now can be perfect for some and not so perfect for others, but how is your timing? Let's look at these factors. Number one, do you want to buy a home? Are you tired of wasting money on rent? Are you ready for the money you spend each month to help you build your own wealth? Do you need more living space? All of those questions. Number two, what is the maximum house payment that you can comfortably afford on a house payment? Can you restructure some debt and make some breathing room to make room for a bigger house payment? Number three, how much will you keep in your emergency fund after paying money for closing when you buy your home? Well, Mark, you've got some to say about that.
When you start talking about emergency funds and things like that, that's when you're getting into my ballywick a bit, and I advise people on a regular basis. 3 to 6 months is a great idea without a doubt. But also, when you're in a positive investment environment, having money in the stock market that is growing and compounding for you may be part of that 3 to 6 months, so that if things are going up, rising tide lifts all boats, then your savings are going up. Should you need them in an emergency, you can withdraw them and use them as necessary.
Oh, that's a great point. Here's another one. How does your credit look? Well, the higher your credit score, the better terms you're going to get on a mortgage or anything else you're going to borrow.
Like insurance.
Right,
Home
insurance, car, your car note, your house note. 700 is usually considered a pretty good score, and anything higher than that is really good. But call me, I can help you with improving those credit scores. I want to tell a quick story. I love stories. Now, this is kind of a representative story, and I call it Harry and Hetty, a little sibling rivalry. But this shows you what's going on in the Mid-South particularly. Friends that knew Harry and his younger sister Hetty knew that they were really loyal to each other, but given the opportunity, they engaged in some sibling rivalry. Who could one-up the other one? Well, Harry finally bought a house for about $300,000. He did that in October of 2023. He used some savings and he borrowed against his 401k and he put down 20%. We got a loan for about $240,000 with a principal and interest payment of about $1,800 a month, plus, of course, taxes and insurance. It was a 30-year loan, and because of October 23, when he purchased, his rate was in the low 8% range. Y'all may remember that in October of 23. Harry had some bragging rights, though. He was now a homeowner, and part of his monthly payment was going toward paying down the balance on his mortgage instead of the landlord's. And the price of his home was going up. Well, Hetty, his younger sister, bought a similar house in the same neighborhood now, similar house, but the prices 2 years later when she bought her home it had gone up about $20,000. So she paid more for her house, put 20% down, and the win for her was that the mortgage rates today, when she purchased, are 2 interest rate points below where they were in October of 23 when her brother bought. So now Hetty is paying $200 less a month. She had to pay $20,000 more for the house because appreciation over the last 2 years, and I'm talking mainly in the Mid-South here, not all over the country. So both of them had some wins, and both of them could improve. And I'll give you a hint. If Harry wants to even the score a little bit, he could refinance right now. He has a rate in the low 8s. He could refinance right now and really even the score on one-upping his sister. So all of that to say is don't put off till tomorrow what you can do today. And Mark, I'm going to turn it back over to you. We've got about 4 minutes or so before we have to go to break. And talk about, share some of your insights and predictions on where our economy is going, especially as it concerns mortgage rates.
Thank you very much, Joe. When you tell that story, I'm reminded of the best time to plant a tree is right now. When's
Right.
the second best time? Yesterday or the year before or 10
or 20 years
before.
ago.
Yeah, exactly. I've owned 3 houses, and each one has been quite an experience, a lot of work, a lot of fun. And as a result, as things change, I've had to adapt to different mortgage rates. I've had to adapt to different locations. And, I find that when I look back about why things are the way they are, the more I understand of the history, the better I can help advise people. Mortgage interest rates are tied to the 10-year Treasury bond.
Yes.
And the 10-year Treasury bond started trading back in 1790.
Wow.
Yes. So this is the longest instrument of the U.S. market that we can look back and judge where things are headed in the future.
The 10-year Treasury bond.
The 10-year Treasury note. And those notes have been recently as low as 0.5% in May of 2020, and in 3 years rose tenfold, all the way up to 5%.
That's when we saw, when it was 0.59, I think it was, on the lowest day. We're talking the Treasury note, the yield. Mortgage rates were about the high 2s on a 30-year. And then as you said, they began to go up leaps and spikes. And then, voila, we were at this that Harry was paying around 8%.
Right. When that happens, for example, in your example, yes, he may have paid a lower interest rate for a cheaper home, but had he waited like his sister did, next thing you know, the house is appreciated, and now interest rates have pulled back from that 5% on the note down into the 4s again. In fact, it was below 4% prior to the incursion in Iran.
Wow.
So there's great opportunity if you understand these relationships. Typically, stocks and bonds do better during periods of financial strength. Commodities tend to do much better during periods of risk like we're in right now and volatility.
Well, to our point, they say don't put off till tomorrow what you can do today. Marry the house. You can date the interest rate. I mean, gosh, in this story, Harry could always refinance today. And, hey, he bought his house 2 years ago, so he got a good price on it. Prices on homes tend to go up over time. But you're on Real Estate Mortgage Shop. I'm your host, Jo Garner. I'm a mortgage loan officer. What do you want to accomplish with your mortgage? I can make that mortgage process easy for you with the right program. Connect with me at jogarner.com. When we come back, we're going to be hearing more from Mark Ruleman of Ruleman Asset Management and Planning. How do we contact you, Mark?
I can be reached at 901-488-8228.
We'll see you guys back in just a moment. Real Estate Mortgage Shop provides general information, not an offer to lend. Jo Garner, Talk Shop. Real Estate Mortgage Shop does not endorse 100% of the information covered on Real Estate Mortgage Shop. Consult with your certified advisors before acting on any information given on Real Estate Mortgage Shop. Jo Garner is a licensed mortgage loan officer, NMLS 757308, Equal Housing Opportunity.
Hi, I'm Brandy Spicer with Howling Wolf Bookkeeping. You're listening to Real Estate Mortgage Shop. And now back to your host, Jo Garner.
Okay, it's time for Comic Queries. You probably already know the answer, but we're going to ask you anyway.
What does this little limerick describe? Here's the riddle. There once was a warm place, warm and bright, Where would you hang up your hat every night? Live in it, rent a room to someone, watch the value just bloom, and one day it may fund your next flight.
What is that place you can hang your hat? Warm and bright. I would say your home, if you own it.
There you go.
Did I get it? I got it right, yes. And I know some of our listeners, they probably beat me to the answer on that, so congratulations to you guys. But today on Real Estate Mortgage Shop, we're talking about reading the rate signals, timing smart moves for buyers and home owners. I'm your host, Jo Garner. I'm a mortgage loan officer for your home purchase or your mortgage refinance you can brag about. Connect with me. I can help you find the right mortgage and make that process so easy. Connect with me. Text me. Call me 901-482-0354, 901-482-0354. And Mark Ruleman, how do we contact you?
Visit my website, www.markruleman.com.
markruleman.com. There you go.
Risk management tool in particular is something that'll help you figure out how you feel about your money.
Well, Mark, besides being the great communicator, the man who sees around corners, you're also known as and you really are an established market historian. So from that seat, let's talk about where you see this market.
Well, the stock market, I think, is in a very interesting place. I think that earnings, which drive stock prices, are marvelous. They're magnificent. And therefore, I'm very positive. But I don't just rely on what I think. I tend to lean on the best people I can find. And one of them is Dr. Ed Yardeni. Dr. Yardeni I've been following since '88 when I first got in the business. And he recently said that he thinks the stock market's going to 10,000 and that gold's going over 10,000 also.
Wow.
Yes. And he is also warning us that we could have a meltdown. And that's, if you're thinking about retiring, a meltdown, a market that declines, is the worst thing that can happen.
You're talking about the stock market.
Right, the stock market within the 5 years before or 5 years after. And that is the retirement red zone, and that's what I help my clients maneuver especially.
Mm-hmm. So what is your advice to somebody who is within 5 years of retiring?
Well, first of all, you can do it yourself, but you need to get another pair of eyes. If you do the risk management tool, what I've found is markets risen 100% in the past 4 years. If you think that's going to continue, like people thought in 2007 at the peak,
mm-hmm.
you need somebody to hold your feet to the ground and protect your assets from major changes in the market.
Okay, so I want to go back to something we were talking about in the beginning, and you're a market historian, and you've been watching this 10-year Treasury note, and the 10-year is where the mortgage rates are very strongly tied to that 10-year yield. So we have seen the yields go as low as, you said, 0.59, I believe, back in 2020, and then we saw them go really high in October of 2023, and they've been kind of coming down since 2023. Where do you see the 10-year and mortgage rates going over the next year, Mark?
Well, I expect things to be relatively flat during that period. Mm-hmm. And by that, I mean they could go back up to 5% and they could go back down into the 3s for the 10-year note. Mm-hmm. For a year or so.
Which would probably translate to rates staying in the 6s right now or going down even into the 5s.
Right, but not necessarily home prices staying down.
Right.
Because inflation is not going away.
Right.
I think inflation is going to be very difficult to put back in the genie bottle of below 2% like it was in 20. Mm-hmm. It was 1.7%.
The good thing about real estate, and you and I have discussed this over the years, owning real estate is an excellent hedge to protect you against inflation because real estate tends to go up in inflationary times.
Correct. I was shocked when I noticed the average age of a first-time buyer now has pushed 40 years old.
Wow.
I think it's absolutely critical, even if you got to get together with some of your friends, that you try to go ahead and take a position, borrow money from family members, whatever it takes to go ahead and not be paying rent, but instead to be building equity.
Right.
It's a critical part.
Even if you sell the house and have to split the equity, it's nicer to have a piece of the pie than none at all.
Exactly. So one of the financial maxims that I teach is that you should always pay yourself first. Mm-hmm. Most people tend to put savings as last, and savings last is a way to fail, in my opinion. If you pay yourself first before you pay any of your bills, you will wind up saving for those houses to purchase and those other things that you need for retirement.
And if you are a first-time home buyer, you've heard me say this many times, there's down payment assistance programs. If you're a first-time home buyer, there's down payment assistance programs if you're not. There are special programs lower than market rates for first-time home buyers, and there's special programs with lower than market rates if you're not. So if you want to know what those are, I am happy to have a discussion with you. Let's see what we can do to get you in the right product. Connect with me at jogarner.com.
And Mark Ruleman at 901-488-8228.
I mean, we just have so much more to talk about, and we're going to be talking about some more, and I'm hoping to engage Mark Ruleman with some more good information. And when we come back, I'm going to be sharing with you about getting the timing right if you are thinking about making a real estate move, and also giving you some examples of people who are making the move and how they're winning at doing that. You're on Real Estate Mortgage Shop. I'm Jo Garner, your host. I'm a mortgage officer. Connect with me whether you're in the Mid-South or anywhere in the country. I'd love to hear your story, jogarner.com. So yes, we're going to be hearing more from Mark Ruleman of Ruleman Asset Management and Planning. And Mark, how do we contact you?
You can reach me at www.markruleman.com.
markruleman.com, and connect with me at jogarner.com. We'll see you guys back in just a moment.
You're listening to mortgage expert Jo Garner, author of Choosing the Best Mortgage, The Quickest Way to the Life You Want. And she has a golden nugget from her book. You can order Jo's book on Amazon and Barnes & Noble. Hey, Jo, if someone is self-employed, can you show them how to get more qualified income for their loan?
A good mortgage officer, we know how to start at the back of the tax return and move forward to the front. We know what expenses we can add back to income for qualifying purposes.
Order the book today. You'll be glad you did.
Hi, I'm Taylor Morse of Cartridge World of Collierville. You're listening to Real Estate Mortgage Shop. Now back to your host, Jo Garner.
Okay, most of our regular listeners know that it's time for Did You Know, and see if you can guess the answer before we do.
Who is this Memphis real estate investor and developer? This man and his company created a revival of downtown Memphis riverfront area and was heavily aided by the countercyclical strategy where he invested in declining low-cost assets just before a market turnaround, and coupled with strategic use of public and private incentives. He also partnered with Jack Bells. His projects thrived by creating value in neglected areas before they were considered prime, effectively riding the wave of subsequent 1990s and 2000s revitalization boom.
So who is this? Well, it could be a number of people, but the one that this best describes is Henry Turley of the Turley Company, revitalizing downtown
A great
Memphis.
man.
Yes, downtown Memphis. Yes, he was. But today on Real Estate Mortgage Shop, we're talking about reading the rate signals, timing smart moves for buyers and home owners. I'm your host, Jo Garner. I'm a mortgage loan officer for your home purchase or your refinance you can brag about. I can help you with a traditional mortgage, maybe a special program, or even an outside-of-the-box mortgage program to help you. Connect with me at jogarner.com.
And Mark Ruleman at 901-488-8228.
And Mark is a financial advisor. He's known in circles as the great communicator, and he's also a market historian. So we're looking in the past in order to predict the future today. And I mean, Mark, just like we were talking about, uncertainty in geopolitics, uncertainty in the job market causes volatility in these financial markets, which affect people who want to buy a home or people who want to refinance. And here are some of what the big agencies were predicting back in January. Of course, maybe some of those bets are off, who knows, but right now, this is what they're predicting for 2026. Fannie Mae predicts mortgage rates on the 30-year will hover around 6% for most of the year. Mortgage Bankers Association forecasts the 30-year to stay in the lower sixes, maybe a little higher than that, maybe between the low sixes and mid sixes in 2026. Redfin projects even higher. They're projecting pretty close to right under 6.5 for 2026 due to a weaker labor market prompting Fed rate cuts and all of that. Freddie Mac, let's look at what they say. They say it's going to settle below 6, so they are very positive rates are going to be lower. I know in your conversation we had earlier, you're saying higher. You're kind of going with some of these other agencies that are saying, no, this is actually going to be stable, but higher.
I think so, and particularly longer term.
Well, the opinions vary. Mortgage rates are tied closely to the yield on the 10-year Treasury. And since the 10-year Treasury tends to move up as inflation moves up, your mortgage rate will tend to go up if inflation goes up. So we've got to watch that. That's one reason today, March 10th, 2026, rates have been up because of the oil prices going up trigger inflation. And it tends to be pushed down when job numbers are not very good. And we're seeing a tug of war here because we had some poor job numbers. We've had high cost in petroleum. So you're in a tug of war. The White House, though, has directed Fannie Mae and Freddie Mac to use roughly $200 billion, yes, that's what I said, billion with a B, in accumulated capital reserves to purchase these mortgage-backed securities, which the directive there is aimed at reducing mortgage rates by having more of those purchases of the bonds and getting the mortgage rate, you might say, even artificially pushed down a little bit to make housing more affordable. So let's hope for more affordability, more market liquidity. But from the mortgage desk, I am seeing a tug of war, Mark, and pulling mortgage rates down, of course, in 26 is what we want. And you have a good case for why aspiring home buyers or people wanting to refinance need to go ahead and do it if the deal works for them today.
There's an old adage in the Ruleman family, you got to believe to receive. If you believe the future of America and the growth of the housing market, you will buy a home. You'll own your own home, and you'll build the American dream that way.
Well, and going back to the story about Hetty and her brother Harry, if rates move down, typically the home prices go up. So you've got that going on. So don't wait. If you can afford the house today, buy the house today. If you can afford to refinance and restructure your financing today, let's do it today. You can connect with me at jogarner.com, and I can help you. I can help you do that. But 30-year mortgage rates dipped last week to around 6%, or a little bit actually below, but they started ticking up due to these rising oil prices and the conflict in Iran. Do home buyers or homeowners refinancing need to move forward, or do they need to fall back and wait? We've already answered that question for you. Do you want to buy a home? If you wait for lower rates, you're going to compete with more buyers trying to buy the same home, and home prices are predicted to go up. Realtor.com quoted an expert this week saying, if you find the right home and you can afford the monthly payments, you should take the opportunity in front of you. Now, are you refinancing? Are you just wanting to lower your rate and your mortgage payment? Explore a refinance when the rates drop at least 1 point or more below the rate you are paying now. That is telling you when it's time to refinance. But if you're doing a debt consolidation, it is all about the interest you save by replacing that 18 to 20% interest credit card or other high interest rate debt that you're rolling in to your cash out refinance mortgage.
It is horrible how much debt is out there, and anything that would help you make that debt more deductible, like a home mortgage, is a positive financial move.
Well, and really quickly, if you know you're going to come into a large sum of money, you're going to get an inheritance, or maybe you're going to sell a home later, and you're waiting for that, don't wait. There are other tools that you can use to go ahead and do what you're going to do today. There is a tool called a recast that will allow you to put a large sum down for prepayment to principal and lower that payment after, like later on. So talk to me about that. But real quickly, I want to highlight some clients who they're doing what they're doing today, and they're getting good timing at it. J. Ray, he had a dream. He was tired of wasting money on rent. He wanted to buy his first home. But mortgage rates were making the payment too high for him to afford the house. The solution for J. Ray to make that timing right, Mark, was a special mortgage program for veterans and first responders with an ultra low interest rate below the market.
Very positive.
Great for J. Ray. Daryl Dason, he's an investor. He had a dream of building a net worth and an abundant passive income so he could live the life he wanted. The challenge was for him the traditional mortgages were too restrictive. His solution was these outside-of-the-box special in-house programs that we use for rental properties. Go ahead and do it now. Don't let all the traditional loan restrictions stop you from doing that. Here's another one. The Caldwells, of course, not their real name. None of these are the real name. Their dream, they wanted to spend 3 to 4 months a year making memories with their young grandchildren. The challenge, they lived 1,000 miles away in a community they loved. They didn't want to leave their primary residence, and they didn't have enough money or an income to buy a second home. So the solution for them was a reverse mortgage that they got on their primary residence that gave them enough funds up front and enough extra monthly income to buy the vacation home close to their grandchildren. And the list goes on and on, Mark.
The amazing thing about reverse mortgages is that in financial planning, they are state-of-the-art financial planning tools. If you go to the Wharton School or the University of Texas schools, these top financial planning educators recommend that you look at reverse mortgages to protect your nest egg and to help you have alternatives for health care and for other things like a second home.
Right. You can do these kind of things. And we like to say on Real Estate Mortgage Shop, make your plan, let's work your plan. If the deal works for you today, let's do it today. I can make that mortgage process easy. Connect with me today at jogarner.com. And you can email me, jo@jogarner.com. Mark Ruleman of Ruleman Asset Management and Planning, how do we contact you?
901-488-8228, Joe.
All right. Well, we've got more to come, so stay tuned. Don't go away. And we're going to be offering you some good tips, and we will see you guys back in just a moment.
Hello, I'm Leanne Morse with All Things New in Collierville, Tennessee. You're listening to Real Estate Mortgage Shop. Now back to your host, Jo Garner.
Okay, for our insights and inspiration, this is a story of a great leader who rose to power through the philosophy of rigorous preparation over perfect timing. He famously said, "I will prepare, and someday my chance will come." This man was born into poverty, had less than a year of formal schooling. He prepared for his future by teaching himself law and surveying while working manual labor jobs. When this man entered politics, it did not seem to him to be the best of timing because lost multiple bids for the U.S. Senate in 1855 and 1858. He was suffering several business failures. Rather than viewing these as signs of, quote, bad timing, Abraham Lincoln saw it as good timing because these hurdles further prepared him for the moment when he was finally elected president in 1860. Abraham Lincoln is known as one of the greatest presidents of the United States. He did not sit on the sidelines waiting for the right time. He moved forward and kept working to get closer to his goal until the day came when his dream came true. Do you want to buy a house but you aren't sure of the timing? Can you afford the home you want? If not, can you afford a smaller starter home? Getting started is more important than hanging back waiting for perfect timing. What do you want to accomplish with your mortgage? I can help you. I want to help you with tools and special mortgage programs to get you quicker to the life you want. JoGarner.com. Today on Real Estate Mortgage Shop, we're talking about reading the rate signals, timing smart moves for buyers and homeowners. I'm your host, Jo Garner. I'm a mortgage officer. I can help you with your home purchase or refinance in the Mid-South or anywhere in the country and make the process easy. Connect with me at JoGarner.com.
And Mark Ruleman at www.markruleman.com.
MarkRuleman.com. He's with Ruleman Asset Management and Planning. And Mark, we're going to do something we like to do every week. The real estate tip of the week. And I think you've got a tip for us.
I absolutely have a tip for you, other than the ones I've already given you. But if you're close to retiring, it's everything that worked for you in accumulation for that retirement, which is going to last decades, hopefully, works against you in retirement. That's one of the reasons that you need to find a qualified financial advisor, a wealth manager that can help you weather the storms ahead and be ready for that future that you all want to live.
That's right. I love your tip. And I've got a tip from the mortgage desk. There are traditional loans, good rates, good payments. There's special loans, but there's outside of the box loans. What does that mean? That means that there's a chance if you have $1 million or more in qualified assets, or assets, I say qualified, but I mean verifiable assets, marketable assets, you could actually get a loan without having any income. Did you know that?
Yep.
It's amazing, but it is called asset depletion. So if that's what's holding you back, don't let it hold you back. Are you wanting to move outside the city and maybe do a little hobby farming? There's a loan for that. There's special loans for self-employed people who own their own business. They have great CPAs, so they don't show a lot of taxable income, but there are loans that will get you qualified. So connect with me at JoGarner.com. But I want to say thank you to the people who put us behind the mics, Mark. Talk Shop is one of our major sponsors, and they offer free education and networking to anyone interested in real estate, business, health and wellness. And they have a meeting in person and online every Wednesday, 9 o'clock Central at the Independent Planning Group's Conference Room 110 at Clark Tower, 5100 Poplar Avenue, first floor in Memphis, Tennessee. You can go to shoppe.com and hit the events tab to find out more. Thank you to Ben Hunter, an outstanding financial professional, Independent Planning Group, for being our Talk Shop's location sponsor. Talk Shop on Wednesday, March 18th, 2026, 9 a.m. Come out to network with other businesses and get some helpful information from Lynn Doyle. And she's with Crestwind Behavioral Health, presenting the topic, Stress is Inevitable. Suffering doesn't have to be. This is a health talk powered by Mary Lou Novak's resourceforcare.com and Tim Fleshner and Janelle Holloway Parks of Mid-South Home Helpers, helping your loved ones stay healthy and happy. And it's hosted by Talk Shop.
Fabulous.
We want to talk with you, and we want to introduce you to some of the people at Talk Shop. Thank you to Troy and Lynn McDonald of Aaron McDonald Insurance Agency for your contributions to our real estate and business community through Talk Shop. Call Lynn McDonald for a quote on your home and auto or umbrella insurance, and you're in good hands with Lynn, 901-849-7101. On Real Estate Mortgage Shop, we want to remind you to make your plan. Let's work your plan if the deal works for you today. Let's do it today. Subscribe at jogarner.com, and we'll send you our podcast, our show notes, and we'll even throw some pictures in there for you. We have a quote from the Quote Corner. This one is from Martha Beck. Every day brings new choices. And I like this one, Mark. This one's from Anonymous. It says, it's true, creditors have better memories than debtors.
Absolutely.
That's true, isn't it? Anything you want to add?
Just what a joy it's been here. I hope that the education has helped your viewership, readership, and please take advantage of going to Talk Shop online or in person, because it is a tremendous resource. Joe, you're beaming. You do such a great job helping educate America about the importance of having a good mortgage and being invested in real estate.
Mark, thank you for saying that. I actually wrote a book back in 2020 and 21 called Choosing the Best Mortgage, the Quickest Way to the Life You Want. And I had an opportunity to share so many stories from my Hall of Fame clients, of course, changing the names in a little detail to protect the privacy. But I've learned so much, Mark, just from the people, my clients and the people who refer them. And you're one of those, Mark. You're one of my referring partners, and I learn a lot from you. And I've learned a lot over the years.
Thank you, Joe. I appreciate your saying that.
We all learn from each other, don't we? I know I'm a talk show, a podcast junkie. I learn from the podcasts I listen to, the radio shows I listen to. There are a lot of great radio shows here at this station, so we encourage you to get the app and listen and learn. Hey, we all learn from each other. But thank you for being on Real Estate Mortgage Shop. We hope that you'll subscribe at jogarner.com, that you'll tune in and listen to us every week on Saturday, 11 o'clock Central. I'm Jo Garner. I'm a mortgage officer. Connect with me at jogarner.com. Mark, how is the very best way to contact you?
I can be reached at 901-488-8228.
8228. Okay, and I'm 901-482-0354. Thank you for listening, and hey, we look forward to hanging out with you next Saturday.
Great.